Welcome back to another episode of Insurance Mysteries Solved with Nick and Nancy. As you remember, on our first episode, we covered deductibles, which were the first step in paying for a major medical service. So today we'll be covering coinsurance, which is the next step after you've reached that deductible. Want to start it off?
I do. So coinsurance is one of those terms we get a lot of questions about because people are unsure exactly what it means or when it applies. So coinsurance is simply the cost sharing between you as a member and the insurance company of covered expenses, generally after the deductible applies. So for an example, if somebody says your plan has 80/20 coinsurance, what does that mean, Nick?
Well, that means that you as a member will be paying for 20% of covered services after you've met your deductible, and the insurance company will be paying 80% of covered services. If you have a higher coinsurance, like 90 or 95%, you will be paying less for those covered services after you've met your deductible, up until you hit your out-of-pocket maximum, at which point your plan pays for 100% of all covered services for the remainder of your plan's year. Do you want to talk about some different instances where it's better to have a higher or lower coinsurance?
Sure. So, again, different levels. You'll see it anywhere from 50% all the way up to 100% of coinsurance. And so, again, always pay attention to the portion that you're responsible for. A higher percentage that you're responsible for, so in other words, a 50-50, means you're going to reach your maximum out of pocket faster because you're sharing more of the covered expenses. But the result, just like the deductible, when you're sharing more of the cost, the premiums tend to be lower on the plans. So, Nick, does coinsurance come into play with copayments?
That's a good question. So coinsurance does not usually affect copayments. Like if you're going to if you're going to go in for a doctor's office visit and you have a $30 copay, you're not now going to be paying 20% of that $30. You're still going to be paying $30. Same thing with prescriptions, but instead of those not counting towards your deductible, they're counting towards your out-of-pocket maximum. So we'll talk about that on the next episode, but all of that, the copays, the deductible, and the coinsurance gets added into that big number. So is there anything else you wanted to cover with coinsurance?
Just one last thing. So for an example, let's say that you had a $1,500 expense that was subject to the deductible and the coinsurance. And your plan had a $500 deductible and 80/20 coinsurance. In this instance, going back to last week, the first thing you'd be responsible for is the $500. And then the remaining $1,000 is going to be a cost share between you and the insurance company. And if your portion is 20%, Nick, how much are you going to pay out of your pocket?
You're going to be paying $200 instead of if you had a plan with, let's say, a 50% coinsurance, you'd be paying $500. And although you'd be reaching your out-of-pocket maximum sooner with the 50% coinsurance example, you're still going to be paying more. So in my opinion, it's better to have higher coinsurance because you're paying less money and it'll take you longer to spend more money.
Well, I think that about wraps it up. Coinsurance is very straightforward. And next week, we're going to talk about how the deductible and the coinsurance apply toward the out-of-pocket maximum, which that one gets a little bit trickier and a little bit more complex. But for today, that's it on coinsurance.